Hi everybody, thanks for joining and welcome to Surrey Business Society's Finance Consulting and Tech Division's final event of 2020, discussing finance with an industry expert. So we are pleased to welcome Erland Boe, who has very kindly agreed to give his time to speak at this event and is live all the way from Silicon Valley. Now, the event itself is going to focus on some of the roles which Erland has been involved in, and then an insight into the reality of working in a asset management kind of finance business as opposed to how they're portrayed in the movies. And then we're going to be looking at some past events which have shaped asset management, and then finally looking at some emerging technologies which are going to shape asset management in the future. And then finally we'll have time for a short Q&A at the end. Now, before we begin the main discussion, I'd like to give Erland the opportunity to introduce himself for the benefit of the audience. Erland?
Thank you, Matt. Thanks for having me. It's my pleasure to participate here with all of you today, and I'm excited, to be part of this discussion and share with you, some of my insights and what I've learned over the years. Just a little introduction on myself. I was born in Norway, grew up in Oslo, west side of Oslo, and went then to the University of Surrey in actually 1984, a long time ago. Graduated in 1988 with a degree in electronic electrical engineering. And then I went to California and initially started to work in Silicon Valley, did that for a couple of years, but switched to finance. And, I worked in finance, specifically asset management now for almost 30 years, so a very long time. And I recently got reconnected with the university through Jesse Billing, and now sit on the alumni board for the US, and went back to the university, I think it was last year, and saw campus again, and that was a lot of fun. And actually there was an event, Buckingham Palace, with the Kent that I participated in too, and met Max and a bunch of other people involved in the university. So it's exciting for me to sort of be back, reconnecting, and I look forward to this discussion.
Amazing. Thank you for that introduction, Erland. Really appreciate it. Now, quite early on in your career, we discovered from your LinkedIn profile that in the 1990s you were employed as a regional sales director at Prudential. Now, considering you graduated from the University of Surrey in 1988, how did you manage to secure a position of that sort of level?
Well, my story, if you elaborate a little more on my introduction, is, I sort of grew up on the west side of Oslo. My parents were teachers. They really wanted me to go to university. I was good at math. I went to Surrey, studied engineering. I didn't really want to go back to Norway and start working right away, and was sort of intrigued about the US. And my mom, my sister, had gone to college here, and a lot of my friends and relatives had been to the US. And it was sort of common, in the area of Norway where I grew up, to spend time overseas. That's how I went to Surrey, and then I wanted sort of to go on, and go to US. And I came here originally to windsurf and check out the United States. I was really into windsurfing, the outdoors, etc. And came to California, and then I started looking around for jobs. And it was sort of a tough time in Silicon Valley in the early 90s. Hard to think about that today, with the boom that we've seen here over the last 30 years. But actually in 1991, which just when the Cold War ended, and there was a lot of engineers who just got laid off, and I had a hard time really getting a good job in Silicon Valley. I had a couple of jobs, that were not really that good. And I was contemplating going back to Norway and, started working there and sort of, suburban Oslo, and, kind of go back to the life that I kind of had before I left for, London and then California. And then it sort of happened that, I had a Norwegian friend, who I knew really well. And he was a little older than me. I think he's a couple of years older than me. He had gotten a job for Prudential Securities, a big brokerage firm. And he got me an interview at Prudential Securities. And they ended up hiring me. And, I remember going to my interview, and I try to really impress them, with my math skills and knowing all these different formulas and, things of that nature. And they didn't really care about that at all. I sort of learned very quickly that it was all about sales and marketing and people skills and that sort of stuff. That seemed to be much more important. And I really got the job at Prudential through my connection with this Norwegian friend, who really gave me an introduction and teed me up. So that's really how I ended up at Prudential Securities and really got my start. And I remember, about a week or two into the job, my boss invited me to a conference in Carmel, California. And I don't know if you've ever been to Carmel, California, but it's a beautiful place. And we were staying at a hotel that was right on the water. And, I had a hot tub in my room, and we played golf at Pebble Beach. I mean, oh my God, it was so much fun. I thought, I have just gotten the best job in the world, and I was just so happy and thankful that my friend introduced me to this fantastic job. So, that's really how I got started.
That's amazing. Thank you. And it's very interesting hearing kind of how your upbringing played a part in your decision to kind of go outside of Norway and, firstly to travel to the UK and then to go on to the United States. One follow-up question I think I'd have to kind of your response is, did that role at Prudential then enable you to go on to other companies and to kind of further your career from what you had originally learned at Prudential?
Sure, it did. So I did spend 5 years at Prudential Securities, really, supporting, financial advisors, who have high net worth clients. And I sort of supported them with analytical work, and then later on, helped them, deal with clients and bring in business, so to speak. And then from there, I actually joined Morgan Stanley and had a short stint, about a year where I worked at Morgan Stanley in a very sort of similar kind of job before, I was sort of at a crossroads in my career. And, I had now worked at Prudential Securities and Morgan Stanley, sort of a similar job for, 5 years. And, I was sort of looking for a career change and looking to see, which direction, I should go. And, was looking at, joining, Morgan Stanley as a financial advisor. That was one option because I already worked there, to have high net worth clients and manage money for them. The other option was really to do something called institutional equity sales, where, you would actually call on, fund managers and recommend stocks to them. And sort of sell research and do IPO roadshows and things of that nature. And the third option was really to work for an asset management firm, a fund manager, I think is what you guys really call it, in the UK, an asset manager, where you manage money for institutional investors and retail investors, for a fee. And that's really the direction that I decided to go. And I interviewed with a whole bunch of different firms, a whole bunch of different ones, and ended up going with a firm called TCW, or Trust Company of the West, which is a global asset management firm that's based in Los Angeles, but got offices in New York and London and Tokyo and a bunch of other places.
That's amazing. Thank you very much for that information. I think one thing I'd kind of add maybe to what you said, and I think a lot of people when they think of asset management firms, kind of Wall Street, Silicon Valley, is people's views are kind of very much derived from how these places are portrayed in the movies. So, everybody's seen the original Wall Street movie in the 1980s, The Big Short, Wolf of Wall Street. From kind of your extensive experience working in various different finance asset management firms, how does the portrayal of working in these companies differ in real life from what you've seen?
Well, I think, if you look at movies, like my favorite movie, Wall Street movie is really Trading Places. If you guys remember that one with Eddie Murphy and Dan Aykroyd, et cetera, which is really funny. And, kind of shows how, how Wall Street, can or cannot work. But, I think, if you look at, the Oliver Stone film, Wall Street, it sort of portrays Wall Street in a very bad way. And that was really the point that Oliver Stone tried to make when he made that movie. and if you then look at, some of their newer movies like The Wolf of Wall Street, Jordan Belfort, for example, who's portrayed in that movie by Leonardo DiCaprio, he ultimately went to jail, got sentenced, and they shut down his firm. And, The Big Short, the Michael Lewis book, which is a fascinating story. And, at TCW, we actually very close to, all the stuff that was going on with subprime and mortgages, so I know that part of the business, really well. I think out of all those movies that, I just mentioned, The Big Short is probably, a relatively accurate depiction of, what really happened, whereas the other ones really show, what can go wrong. People who got arrested, they got sentenced to jail. It's wrongdoing, that's really portrayed, and how, greed and fear and can really take people down the wrong path. And that's what happened. That can happen in really any industry, really. But, taking a step back and look at, what Wall Street is really all about, it's really the glue that keeps, the economy together. The purpose of Wall Street is really to facilitate growth, for companies of all shapes and sizes, help them raise capital, and provide, sort of a vehicle for investors to participate in that growth. And, Wall Street is vast. It's really the glue that, keeps the world together. There have been some excesses, but they have been, dealt with, with increased regulation, people being sent to jail, those kinds of things. And, they really, really show, I would say, the excesses, the wrongdoing, how things can go south, and how to deal with those things. And they were dealt with effectively. And, the financial industry, here in the US and also in Europe, is the most heavily regulated industry in the world. You have to, take certain exams like the Series 7, 665. I don't know if you guys know all about that, but, there's a lot of regulation, a lot of tests and exams you have to take, really just to participate, to make sure, that, you're doing things correctly. So.
That's great. Thank you. I think I agree with you. There's a lot of movies that are kind of there that portray the negative and the bad side of Wall Street. And, these people are portrayed almost as villains. But it's also interesting to hear that there are movies like The Big Short, which you say are more realistic of the events which we've seen happen within Wall Street. One question I kind of had in relation to that is, in these asset management firms, how would you describe the culture of these firms? And since you've kind of gone through your career, has the culture of these firms changed from kind of the 1990s up until kind of now, the present day?
Well, there's so many different parts of Wall Street, right? There's so many. There's investment banking, there's trading, there's capital markets, there's asset management, there are hedge funds. There are there are venture capital firms. And the culture is very different from one side of the business to another. The fixed income business has a different culture than the equity business, et cetera. But, looking at the asset management business, the fund management business, that is all about, stability. It's about, keeping people employed, for a long time. When people start, at an asset management firm, they don't tend to leave. Like I spent 15 years working at, TCW, for example. That is pretty normal, that people work at one place, for a very long time. So if you want to build an asset management business, you want to build trust between you and your clients. And to be able to do that, you need to create an atmosphere of stability. That means that, that the people who are making the investment decisions, they need to be signed up, with long-term contracts. And the sales and marketing people that services, the clients, they also need to be tied up and be there, for a long time. So the asset management business really is sort of a steady Eddie. You manage, clients' money for a fee, a flat fee typically, and that's sort of the characteristics of the business.
That's great. Thank you. Kind of just touching on what you said about asset management kind of being a steady Eddie business, kind of maintaining those client relationships. Would you say asset management is very focused on being sustainable in kind of in that respect? So it's not, it's not just about making a quick buck. It's more about the long term, about being sustainable and keeping a particular client's business over the long term.
For sure, so if you or somebody else, want to give money to, a fund, or somebody who's managing money for you, they want that commitment to be a long-term commitment. At least 3 to 5 years is what people typically, ask for, because the markets fluctuate so much. So if you don't really give me at least 3 to 5 years, I don't think I can really do a good job for you. If your time horizon is short, then you probably should do something else with your money. So you got to have a long-term horizon. You got to build long-term relationships. And the employees, and the people that you have working there, they got to have the same mindset as well. That you're really in here, for the long term.
Great. Thanks for that. So now that we've kind of spoken about Wall Street and kind of asset management in quite a lot of depth, I think I kind of have now a clear understanding of kind of what life in Wall Street is about, kind of what the life working in an asset management company is all about. Now, kind of moving on from that and looking at some past events which have shaped the financial industry and also asset management. One of those, which has emerged kind of from Wall Street, was the 2008 financial crisis. So how has the kind of the 2008 crisis and any other previous major events that you've seen in your career helped to shape the industry?
Sure. So, taking a step back, so I really started in the early 90s, and in the early 90s, it was all about equities, and then, you had the internet bubble, the dot-com bubble, investor euphoria, a lot of companies, internet companies, went public that never really should have gone public. Investors got, hyped up, they bought into a lot of ideas, companies, that didn't really make any money. And at the end of the day, they ended up losing, quite a bit of money, and if you look at, the crash, that happened in March of 2000, I think the market was down, something like 70%, in 2000 at one point before it rebounded, a little bit. That was a very difficult year, and that had a profound change, on the asset management industry. After that, you got increased regulation. You got something called Reg FD, that, regulation, full disclosure, that sort of prohibited, money managers from, getting sort of selective information, from some of the companies that were investing in. And also you had the internet happen, so you made it a lot easier for, investors to find out information on stocks as well. So to sort of democratize the whole world of investing, and that's when really passive investing really got its start. After the dot-com crash, investors were disillusioned with money managers charging high fees, getting poor returns. So people started gravitating towards passive type strategies, and that's also when exchange traded funds, ETFs, really started to become popular. So Vanguard, is one company that I'm sure you guys have heard about. They're the biggest asset manager in the world. They have index funds and ETFs, and it's really after the dot-com crash that they really became very popular. And also iShares, really took off with their ETF type products, where you can buy an exchange traded fund, for a very low fee, and you can trade it like a stock. Those became very popular, and they really changed the nature of the asset management industry, in sort of the 2000s. And then, of course, you had, the financial crisis in 2008, and, with, the housing market, subprime, here in the US, really taking down, the world economy. It was terrible and disastrous, what happened. So, who were really to blame for, the financial crisis? And I think, there's a lot of blame to go around. You can blame, greedy investment bankers who were pushing out, products. You can blame gullible investors that were buying up, 5 or 6 houses. I remember my gardener back then, had owned 5 houses, with no money down. You had the rating agencies that did a poor job rating all these securities that were coming out, and a lot of people bought stuff that was, had the highest rating, AAA, and it turned out to be full of subprime, and investors lost all their money. I think there was a funny story that was written up in the Wall Street Journal. You can look it up about, I think it was a pension plan up in northern Norway, in Tromsø, that invested in a bunch of really esoteric, toxic stuff, and they lost all their money. It was sort of an interesting story. But also, the regulators as well, the government, didn't really understand the size and the magnitude of the credit default swap market. And, all of those people really have to take blame, for what happened during the world financial crisis. So as a result of that, you saw an incredible amount of fiscal and monetary stimulus, coming into the market that sort of provided a backstop of the free fall that the markets were in. And as a consequence of the world financial crisis, bond managers now suddenly became stars. And if you look at the last decade, specifically, so the 5 years after 2008, bond managers all of a sudden, were, the big stars of Wall Street, whereas, in the past they had been equity managers, stock pickers. Now names like Bill Gross and Jeffrey Gundlach, who I worked for or with, at TCW, became a big star and were featured on CNBC, all the time. So it sort of went from a decade of, equities, to now a decade of bonds, so, bonds and investing in mortgages became a great place for investors to allocate some of their capital.
That's great, thank you. Some of the research that I actually did around the 2008 financial crisis is a lot of the fund managers that came out of that now kind of hold the belief that the status quo should always be challenged. So, for example, a lot of them previously just assumed that mortgage bonds were boring and safe. So I guess it kind of goes back to that old cliche about expect the unexpected, and then also kind of never take anything for granted. One final follow-up question I had for this one was, how does being an asset manager in what we're facing at the moment in regards to the pandemic differ from what it was like in 2008?
So now, we have another crisis on our hands, and, of course, is the pandemic, which has been terrible for the world, but it's been really great for a lot of investors. And it's been really great for equity investors in particular. The NASDAQ, is up 45% year to date. The S&P is up 15%. And you sort of see the new emerging class of retail investors, do-it-yourself investors, specifically young investors, who have really embraced technology, and you've seen stocks like Tesla and Zoom and DocuSign, and, I can name a whole bunch of them that are really done, incredibly well. And younger investors, do-it-yourself investors, have been some of the first to really recognize the power of technology and this whole story of digital transformation. So you've seen, this incredible rise, in some of these stocks. So, I think that's sort of the lesson here, of the pandemic, and what you've seen here this year is that all of a sudden, equity stock picking is back. So, we have sort of went from a world in the 90s that were dominated by star stock pickers, to the dot-com crash, where indexing kind of took over, and then you had the rise of bond managers as a result of the world financial crisis. And now you had a pandemic. And now all of a sudden, you have all these young investors, who here in the United States are using something called the Robinhood app. Robinhood, is a very popular, trading app here in the United States that have really taken off. And I think you have something similar called Webull or eToro. There's a bunch of these online trading apps that you have in the UK as well, that, more and more younger people are embracing. But, I think the story is that younger investors really understand technology better than older investors and have therefore embraced a lot of these stocks. And no stock signifies that more than Tesla, the EV maker that is now just taken over the world, and the market cap of Tesla now it's around $600 billion. It's amazing.
It's great, thank you. Do you think that the young investors that have come in, particularly around the pandemic, do you think the growth of young investors is kind of here to stay, and that will now kind of continue into the future?
I think so. I think, if I look at, the people we have on this call, I'm sure some of you are investing on your own or learning about it, maybe had some good experiences, and you had some good returns. That gets you excited about, working in the asset management industry, gets you excited about working, with investing. And I think you were now seeing sort of a little bit of a change going on, where, if you look at stock investing, whereas, the last, 10 years has been all about, investing in passive, type strategies. Now you see sort of a return of active investing and stock picking, and that's making more sense. And that gets people excited.
That's great, thank you. I think this kind of leads us nicely into the future of asset management, and I think it now would be a good time to discuss some of the emerging technologies that we're seeing. And the one that I wanted to start with was smart beta. So I've studied corporate finance in the past at university, and we learned that the beta coefficient measures the market volatility of an individual stock, as opposed to the systematic risk of the entire market. So could you maybe expand a little bit more on what smart beta involves?
So a lot of money management firms that have been around, for a long time, they're seeing their equity business erode. So I can just look at, TCW, the firm that I worked for when I started there in '98. If you look at our assets, probably 70% of the assets were in equity strategies, about 30% in fixed income. When I left, which is now, about 5 years ago, it was about 95% in fixed income and about 5% in equity strategies. And the reason for that is because, the active equity managers had a hard time outperforming their benchmarks, the S&P 500 or the Russell 1000 growth or whatever you have. And they've seen their equity business, sort of erode. And the equity business pays more. Typically the fee for, a fund, that invests in equities is about 1%. The fee for, a fixed income product, fund, is about, 0.4, 0.5%, something like that. So, a lot of these asset management firms are sort of seeing their fees erode. So they've been trying to come up with products that would appeal to investors, where they can charge more than what you pay for just a standard index fund. If you look at the Vanguard S&P 500 index fund, I think they charge, 3 basis points or 4 basis points, 0.03%, it's very low. So, asset management firms are saying, how about, we come up with something that's sort of in between an actively managed strategy where I charge 1% and versus 0.04% for an S&P 500 index fund. And I put some parameters on there, some screens, like, I might buy stocks with a low PE or a low price to sales, or they put some metrics in there and they create a product that's sort of an in between an actively managed fund, where somebody actually looks at the stocks and decides to buy Microsoft instead of Facebook. But, it's not a purely index type strategy. It's a strategy that has some rules that actually pick stocks for you, but it's sort of in a defined way that's sort of unique to what you are doing. And that's really what smart beta is all about. So, you can look at some of the, the products out there, but, they tend to have some kind of a unique structure where, they only will buy, stocks that have a PE ratio of, less than 30 or whatever it might be. and construct a product sort of along those lines to create a hybrid actively managed type strategy is really what smart beta really is.
That's great, thank you. So kind of what I understand now from smart beta is that it takes kind of the benefits of passive investing along with kind of some of the advantages of more active funds.
I think that's right.
Perfect. So I guess my follow-up question for that is then, now that kind of smart beta is kind of here to stay, does that mean traditional passive investing through index funds will maybe start to decline as we go forward?
Well, I think passive investing is really here to stay. I mean, the trend of passive investing, it's really not going to go away. And you see the most popular strategies out there, which is investing in the S&P 500, and the Nasdaq. So the tickers, for the S&P 500 is the SPY, SPY. Is the ETF ticker, and for the Nasdaq, it's the QQQs. Those are juggernauts. And they're growing like crazy. But they charge a very low fee, and it's a great way for people to participate in the market. But if you look at some of the emerging contenders in the ETF space, like WisdomTree, is one. They're probably the best known company that offers smart beta products, and they've seen very significant growth, and they have some great products. So where will the growth be in the asset management industry, going forward? I think you're right. I think it is really in the smart beta place because people like these kinds of products, and they allow you to get, more specific exposure. If you have a point of view, you might like cloud stocks, or EV stocks, or you might like certain stocks that, have a certain characteristic, whether it be price to sales, PE, price to book, whatever these metrics might be. And that allows you to take, a specific view, with those smart beta type products.
That's great, thank you. I think one of the other emerging technologies that we should kind of now look at is cryptocurrencies. So from what I've gathered, a lot of students who maybe are studying business or finance related degrees tend to have an interest in cryptocurrencies. And I did a little bit of market research in the market cap of cryptocurrencies is estimated to currently be around $400 billion, and it's only expected to grow. Now, I appreciate this is quite a broad question, but hopefully you'll be able to give some insight. How are cryptocurrencies going to impact asset management in the future?
So funny you bring that up because, after I left Angel Oak, you might have seen this on my LinkedIn profile, but I did a short stint at a crypto startup called Iron Chain Capital. And it was a lot of fun. It was sort of a combination of Wall Street meets technology, and, we had an office in downtown San Francisco and sort of a shared space. And, it was fun for me coming from sort of a traditional Wall Street asset management, sort of very button up, uptight type of firm, to now working in crypto. And, I'm a big believer in crypto. And, back when I worked in crypto in 2017, that was during the, sort of crypto heydays, where you saw Bitcoin, hitting almost 2000 and it crashed very badly in 2017, so we didn't really start our firm, kind of at the right time. But, the pandemic really has changed everything because of all the enormous fiscal and monetary stimulus that, we have seen. That has really devalued, the dollar. That's really the big story, that, the dollar is getting devalued, the euro is getting devalued, traditional currencies are really getting devalued. And with Bitcoin, you can only make 21 million of them. So it's really an alternative, to gold. It's a store of value, although, it fluctuates quite a bit. It really is emerging as an alternative store of value for the people who want to protect, their assets. And I can sort of go on and on about the advantages of crypto, but I think more and more big names are now having an allocation to crypto. Paul Tudor Jones, Stan Druckenmiller, to name just a couple of famous hedge fund managers, recommended an allocation, to Bitcoin. And more and more asset managers are springing up that are focused specifically on cryptocurrency. So, you can go beyond Bitcoin, and talk about Ethereum. That provides sort of a platform for smart contracts and a sort of a programmable language that allows you to, put in a lot of different applications. And you can really take the whole of Wall Street, the whole, IPO, securities, trading, investing in public, private companies. I mean, that whole ecosystem can really move to crypto. So the future is very bright for crypto. And I think you're going to see asset managers springing up that have an exclusive focus on crypto. And I think with traditional asset managers, what you will start to see more and more is that they will have an allocation to crypto. And there's a few products that have come up, here recently, that are publicly traded. You might know the Grayscale Bitcoin Trust, which allows you to buy Bitcoin, in your regular brokerage account. But there was another company here actually yesterday who was sort of a competitor to us. When I did a crypto startup called Bitwise, came out with a product called the Bitwise Index Fund, which is an index fund that consists of the top 10, cryptocurrencies, sort of market weighted, that allows you to participate in crypto just in your brokerage account. It's another way for you to participate in crypto. And you have this whole DeFi movement. There's a lot of different ways to participate in crypto, and I think crypto, has a really bright future ahead of it.
Thanks, Erlend. One of the other technologies, and I think the final technology that I wanted to bring up, and I noticed from your LinkedIn profile, you have a very good knowledge on this as well, is blockchain. So how, in your opinion, is blockchain impacting the asset management now, and how is it going to impact asset management kind of in the future?
Well, blockchain and crypto, it's really, it's really the same thing. You can't have one without the other, right? So the blockchain can be used, for a lot of different things. One way, to use blockchain is, kind of to track things. I've seen one example that I heard a lot of people use is, diamonds. You kind of have some kind of certificate, that ensure that, the diamonds that you buy, the gemstones that you buy, are authentic. They were mined in a sustainable, proper way. Those kinds of things. And there's a certificate, that you keep on the blockchain that sort of goes with the diamond, as the diamond moves along the value chain. So those are great applications for, sort of blockchain, technology that doesn't really apply specifically to, the asset management industry. But, there's sort of, you can really use blockchain for everything, for tracking diamonds, for your healthcare records, for whatever it might be. There's sort of a universal use of blockchain technology, can creep into all aspects of our lives. And then a part of blockchain, which is DeFi, investing in Bitcoin and these coins, et cetera, that's the area that's of interest to asset managers, and that's what they would be interested in investing in.
That's great, thank you. That's all of the kind of emerging technologies that I wanted to cover. So I guess the final question that I had to you was, is there any others that we should be talking about today? Is there any other emerging technologies that you think will impact or shape asset management in the future?
Well, I'm sort of thinking about, Europe in particular. And I think, we talked about technology and Silicon Valley, et cetera. And, I heard a stat here the other day that if you look at the top 100 technology companies in the world, there's only one European one, and that's SAP. So, Europe has, a ton of people. It was 400 million people or something like that. And a lot of very talented people, great educational system, a lot of capital. There's really no reason why, Europe should have only one, technology company in the top 100. And I think that is really where the future lies. And, if I was young today and I was thinking about, where I should spend my career, that's really what I would focus on: technology, digital transformation, and that whole ecosystem. I mean, becoming a venture capitalist or investing in growth equities or becoming an asset manager where you invest in public securities, that is an area where I think Europe, has really a bright future, and we'll see, incredible growth. So, if I was young, I would really, and looking at investing, thinking about investing career, I would focus my attention there. Technology, crypto, these emerging technologies, digital transformation. That's really what I want to learn about, and that's sort of the industry that I would seek out, try to get into.
That's great. Amazing. Thank you. So, Erlend, thank you so much for your responses so far. I know that I've certainly gained a lot of insight in speaking with you today. I think now would be a good time to switch to our second part of the event, which is the Q&A. And I know that we've got some questions coming through. So the first question I can see here is, how important is psychology within investing, and how does one keep a calm mind whilst managing investments?
Oh, that's a really tough one. I think that's the reason why a lot of people like to outsource the investment decision to somebody else, because it's really hard, to keep calm, as stocks go up and stocks go down. Should I sell? Should I buy? What should I do? So, my recommendation is that, if you're not disciplined, if you don't have a calm mind, invest in a fund, have somebody else do it for you, because emotions is really, the enemy of a good investor. You want to try to take that away.
That's great. Thank you. And the other question we've got here is, what are your favorite books around the topic of investing, or otherwise? Do you have any recommendations?
Favorite books, I mean, I was, I think, what I've been interested in here recently is sort of, some of the new thoughts, about investing. And, there's a book that I like, that I read here recently that I would recommend. It's written by a guy by the name of Stephen Brill, and it's called Tailwinds. And he really talks about how, capitalism has really changed in the United States specifically, where it talks about how the U.S., if you were to go back to the 50s and 60s, for examples, the shareholders, of most of the corporations, tend to be the local bank or the local pension plan, et cetera. And, everyone was sort of involved, with, making decisions that were good for everyone, the town, et cetera. And then he talks about the emergence of, the big institutional investors, the shareholders' returns is the only thing that matters, et cetera. And he kind of talks about, how things have changed. And you've seen that cycle now is sort of turned back here a little more, where stakeholder capitalism is something that's being talked about and embraced. And, the big proponent of that, here in Silicon Valley is Mark Benioff. And his book, for example, that he wrote here recently, the title now escapes me here for a second, but, that's another one, that, I would really recommend, reading, that really talks about, how capitalism really should work, how it can go wrong, and how it can get back to, where it really should be.
Great, thanks, Erlend. And the next question we've got here is, as you touched upon DeFi, do you think decentralization alone would bring about a change in how the financial system would operate going forward?
Well, I really think, the financial system as it is right now, with, the way that money is raised, through public and private offerings really works, really well. And I think it's going to take a long time before, that will really change. Having said that, there is, sort of a move to DeFi, and it's sort of interesting, what's going on there. But, right now, it's really just interesting, and it's emerging new technologies that are being embraced, but, slowly. But I think the big hurdle, what makes DeFi and, sort of a wholesale change in the financial system, difficult is regulation. That, you have, the financial system is so heavily regulated that changing that, is going to be very difficult. It's going to be a tall order, and it's going to happen very slowly, but it will happen.
Great, thanks, Ireland. And the next question we've got here is: would you be able to shed some light on ICOs? Do you think they're an efficient alternative to IPOs?
Well, ICOs, I don't really have a high opinion of ICOs. I think that sort of go back to sort of the problem with crypto and why it failed. Back in 2017, had a lot to do with ICOs. That people were trying to raise money through an ICO. They didn't do it the right way. They violated the rules and regulations of the SEC, and consequently, they failed. Most of them failed, and that was a huge setback for crypto in general. So I'm not really a huge fan of ICOs.
Sure, thank you. The next question is: what one piece of advice would you give to students who are currently in the process of applying for graduate positions, especially if these roles are very competitive?
Well, I would try to focus on, if I was a graduate student and looking to what to study, as far as my graduate degree, I would sort of go back to, kind of what I said here a little earlier, try to get, try to learn as much as possible about, things that are emerging, so, technology, for example, AI, robotics, programming, computer science, anything to do with STEM, I would focus on, that is, really where the future is, where, your skills are going to be the most useful.
Sure, thank you. And then the next question we've got here is: what is the best career advice that you've ever received? And also, what are the toughest lessons that you've learned along the way?
Wow, those are big questions. No, I think, when I came to the US and started working at Prudential Securities early on in my career, I was an engineer, I came from Norway. All of a sudden I found myself in the financial industry, it's really a lot about sales and marketing and deal making, et cetera. People skills, sales skills, et cetera, are very, very important. And I really had to try to embrace that and learn how to become, a much better salesperson, presenter, communication skills, et cetera. And, this older guy, who I really respected, took me aside, and we had lunch one day, and he told me, to get this book by Dale Carnegie, How to Win Friends and Influence People, that I'm sure all of you guys have heard about. A lot of people laugh about that one, but, hey, that book is a big seller, and a lot of people read it and learn a lot from it, and I would say I learned a lot from that book, and try to embrace some of the ideas, that he portrays and describes, in that.
Great, thank you. The next one we've got is: how do you manage your time? Do you have any daily practices, routines that may have contributed to your success?
Sure. I don't know if you guys, do you ever listen to Tim Ferriss, his podcast? Is that a name that rings a bell?
It rings a bell, yeah.
Yeah, I'm a big fan of Tim Ferriss, and what he prescribes, so, I like to get up early in the morning, and, so I'm up early, and, sort of plan my day, get my coffee, and, I like to do, sort of the bulk of my work, in the morning between like 6 to 12, and then, now that I'm sort of, not so busy anymore with a full-time job, I have sort of the afternoon, late afternoon, to do something else, going surfing or biking or skiing or something like that.
Cool, thank you. Next question we've got here is: what qualities / skills have served you the best throughout your career? And also, what have you had to learn / work the most on?
Well, I think what I had to learn the most, I get rid of my accent, my Norwegian accent, right? learn English, foreign language.
That's quite a big one.
Yeah, exactly. Yeah. But no, it's been, I it's hard. I think it's hard to be, it's hard to have, be good at everything, so you got to focus on something, whatever it is, so it sort of happened that, in my career, I ended up sort of in sales and I was an engineer, but ended up in a sales and marketing job, so I had to kind of switch from being an engineer, being sort of a math guy, to being now in sales and marketing. And learning that, that was a big change, and I really had to, focus on, my presentation skills, communication skills, et cetera. Kind of what I said, here a little earlier. But that's really what I had to focus on. And I think that, when you are a student and you go into business and you start working for, a company, those communication skills, people skills are so important. Being able to work with other people, collaborate, communicate, get everyone to work well together, et cetera. Those are skills that, you constantly have to, work on.
That's great. I mean, a lot of what you've just said very much follows in line with, what we are involved in with the university. And I think it kind of links quite well to the next question that we've had come through, actually. What was your university experience like? So kind of what did you learn and what has served you best today?
Well, when it was quite a change, I must say, for me, coming from Norway to London, that was a big change, getting to the university, and then all of a sudden, it was a foreign language, that, people were lecturing in. And, I thought I knew English pretty well, but then I started at university and there were so many strange accents, it was hard to understand some of the professors and, some of the other students, so that was, the first year, was a difficult year, but, I think there were 3 or 4 Norwegian students, who started at University of Surrey at the same time as me. And, all of us had gotten this scholarship, from Norway to study overseas in the UK. And, we became, of course, fast friends, and, we're still incredibly good friends today. And we sort of went through that learning experience together, living in a foreign country. It was super exciting. It was so fun. I had such a great time. And, I think we lived together for most of the time we were at the university at Hazel Farm. I think that's where, where we were.
Still
oh my God. It's such a beautiful part of the UK, Guildford, Surrey, London. I mean, we were so lucky to have that experience. It was fun. It was rewarding. You met so many different people. It was so international. Oh, what an incredible experience. So grateful for that.
That's really insightful. Thank you. The next question that we've got here is, what is your opinion on Warren Buffett being firmly against cryptos?
Oh, wow.
It's quite a contentious question, but that's what come through.
I think he'll come around. I think he'll come around. Not in the near term, but it might take a couple of years.
Fair enough. The next question that we've got down here is, how do you think blockchain could be better leveraged, especially within financial services?
Well, I think right now, if you were to buy a publicly traded stock, it's pretty simple. You can, call up your broker or you do an online trade or whatever. But, if you want to invest in a private company, let's say you want to invest in one of the emerging companies that are coming out of Silicon Valley that are still private. And that is a difficult thing to do. It's hard to get access. It's hard to do the paperwork. Who's going to sell you the shares? Those kinds of things that can be made so much easier using blockchain technology. It really can. So if you look into where is a perfect application of blockchain, it would be investing in private companies. And there are a few websites now, or online services that let you do it, like SharesPost or EquityZen or Forge or some of those, if you want to look it up, where you can invest in private companies. But blockchain can make that whole process so much simpler. It really can.
That's great. Thank you. The next question that we've got here is, how would you define networking? And could you please share some top tips for networking?
Well, I think networking, and knowing people, is incredibly important. And, I just go back to my own career where, I got my job at Prudential Securities really through a friend, a Norwegian friend that I really knew well. If he wasn't for him, I never would have gotten, into the financial industry. And networking, having friends, is very important. So how do you network? I mean, it's hard today, during the pandemic, but I think, some rules are, never, eat alone. You might have heard that one, where you always want to have lunch with someone, don't eat lunch by yourself, go and have, some drinks, meet up with people, get to know people, get as many industry contacts, that you can. That serves you also really well in the investment industry. Getting, information is really the most important thing to have. And how are you going to get that information? Learning about new things, different things, networking, and constantly doing that, is really key to success. You can't know it all alone. You really have to learn, through other people, either from the university, your work colleagues, your friends, whatever. And enriching yourself, with other people is really the only way to go.
Awesome, thanks. The next question we've got, I think it touches a little bit on what we talked about previously. Could you expand a little bit more about your personal journey? So you were born and grew up in Norway. You then moved to the UK to study, and then you then moved to the US for work. What inspired this journey?
Well, I think going from Norway to London, that was really, I think my mom, my sister had gone to school in the States. I had other relatives who had studied overseas. So I was always intrigued by going overseas, and then I got the scholarship, so I ended up at Surrey as a result of that, and grateful for that experience. And then, I wanted the adventure to continue. And I went to California because of, windsurfing, and wanted to explore the United States, and, ended up liking it a lot, and I sort of like the Californian lifestyle too, which is sort of relaxed, but it's serious. People work hard, but, people are outdoorsy, and I like, I really like the California lifestyle, with the beaches, the mountains, all of that, what it has to offer. And, I was lucky enough, to work for a firm, that was based out here in California, TCW in Los Angeles for most of my career. And I spent a lot of time in San Francisco and LA as a result. But then I left, TCW and joined a firm called Angel Oak, that, focused on fixed income, did something very similar to what we did at TCW, spent 3 years there. And after 3 years there, I was in a very serious ski accident in Alaska. I was actually caught in an avalanche, helicopter skiing in Alaska, and almost died, got badly injured. My leg got flipped around the wrong way, and I had to be helicoptered out, and there was a long recovery or whatever. And my mom also got very sick at that time, and I had to go and spend more time back in Norway with her while I was trying to recover from this accident, and that sort of caused me to take a step back. And after that, I have sort of been doing some advisory work, not-for-profit work, doing some startup activity, investing, kind of working more on my own, compared to what I did in the past. So that's sort of a short snapshot of my sort of personal journey, going from Norway to London to California to kind of where I'm today.
Awesome, thank you. The next question that we've got here kind of relates a little bit back to what we were talking about with emerging technologies. So what's your opinion on the prospect of data science / artificial intelligence with finance?
That is, hey, the next sort of front line for investing is really, as I'm sure you guys have heard about, is algos or quant-based investing, where, there's a computer program that really picks the stocks. And, Jim Simmons, Renaissance Capital, Medallion, you might have heard of him. He's a British mathematician, who's now one of the richest people in the world, really is the originator behind that and probably the most successful quant algo investor, in the world. And yeah, the future is very bright, for that, type of investing, algos, high frequency trading, quant based trading, definitely data science.
Cool. The next question we've got here is, what major trends can be expected within asset management today, given how market dynamics have drastically changed with the ongoing pandemic?
Well, I think, the story of 2020 is the emergence of the young millennials, the Robinhood, do-it-yourself investors, have done, so much better than a lot of professional money managers. And I think that will lead to a comeback of traditional active management. That's what I believe. So active management sort of went by the wayside, after the dot-com bust. And I think what we're seeing here now is that it's really making a comeback. That that you can make money by picking the right stocks, and I think that is going to continue going forward. How long it will last, I don't know, but this year certainly that's proven to be the case.
I guess how long it will last is the $1 million question.
There you go.
The next question we've got here is quite an interesting one. In your opinion, will we see a cashless society by 2030?
Well, I think one thing is for sure, I use a lot less cash today than I did 5 years ago. And with Apple Pay or the credit cards, whatever it is. And I think 2030, yeah, I think you're right. That seems 10 years away. That certainly seems plausible.
Cool. And then the next question that we've got here is, what is your best advice for students looking to follow a similar path to the one you've taken? What is the best way to succeed in the industry?
I think so, as far as like getting new people, if you are a young student, you're looking to get into the asset management industry, what we did is hire interns from some of the local universities. And, I think that's the best way, to really try to get an internship with some of the asset management firms in the UK. Or wherever you're from, but in the UK, some of the biggest ones will be like Amundi, Aberdeen, Bailey Gifford, Man Group, Schroders, Janus Henderson, I know BlackRock's got a big operation there. I mean, I would seek out kind of the biggest asset management firms in the UK and try to get an internship there during your summer holiday, and then hopefully that will hire you back once you finish your degree.
Great, thank you. The next question we've got down here is, with the prominence of robo-advisors, do you think that there will be no requirement for human intervention in the future?
Robo-advisors, interesting you bring that up. I like robo-advisors. I think they do a good job, for the average investor. What is a robo-advisor? It's really, instead of having a financial advisor that helps you, pick your funds or your stocks or whatever it is that you do, a robo-advisor actually does everything for you. You don't really interact, with a human. There's a computer that actually picks the ETFs for you and then reallocates and does some tax loss harvesting and those kinds of things. And, I think, we have seen quite a bit of growth in the robo-advisor market over the last 10 years. Wealthfront, Betterment, are some of the ones, that have emerged, and Vanguard and Schwab actually here in the United States as well. They have pretty competitive product. And I think you will see, more and more all that, as robo-advisors become more popular. People are concerned about cost. They want to reduce costs as much as possible. And, hiring a robo-advisor is a way of doing so.
Sure, thank you. The next question we've got is, what causes volatility within the cryptocurrency space?
Well, the cryptocurrency space, right now is very small, compared to, traded stocks and bonds. So, there's not, there's quite a few cryptocurrencies, but the cryptocurrency market, is very small and nascent, compared to, the stock market or the bond market, and consequently, it's small, it's illiquid, it's volatile, it's really just emerging. And it's going to be a while before it's going to rival, the bigger markets for sure.
Great, thank you. The next question we've got here is, are there any other investing safe havens besides gold?
Well, you can invest, gold, is sort of a safe harbor asset, but the gold price, goes up and down as well, and fluctuates. And gold has been a good investment, here until recently. It started to drop here about a month ago. But, if you are interested in a safe haven, the best place to put your money is in cash or treasuries. They are really the only safe haven out there.
Awesome. And the next question we've got here is, did you always know that you wanted a career in finance, or what was it that persuaded you to start a career in finance?
I didn't really, and thinking back on, what I wanted to study and, what I wanted to do, I think back on those days, when I decided to move to London, when I decided to move to California, should I be an engineer or work in finance? There was, I never really had sort of a clear path as to where I was going to go. I guess what I was thinking back when I was 18 is that I was going to go to London and then come back to Norway and start working, for, some Norwegian company, probably, in oil and gas or computers or something like that. I guess that was kind of the what I was thinking. And then whatever, the life took some twists and turns, and I ended up in California and ended up in finance. I would never thought I would have if you had asked me back when I was like 18, 19 years old, or, a first-year student at University of Surrey.
That's great, thank you. And at the moment, we have actually gone through all of the questions that have been asked by the audience. So if we just give it, in fact, one's just come through. How can someone cultivate an interest in investing without prior knowledge?
Well, I would say, just start reading the Wall Street Journal. That's really the biggest, a financial publication out there, the Wall Street Journal or the Financial Times. Just make it a habit, of reading those two papers every day, and you'll soon gain, quite a bit of knowledge, about the financial markets. And you can also, of course, watch, CNBC, that gives you all kinds of information about stocks and the market and what's going on. So just become a habitual reader and watcher of the financial news, and you quickly will pick up a lot.
Cool, thank you. And yeah, like I said, that is the last question that we've actually had come through. Oh, just as I say that again, another one appears. In retrospect, how would you place 2020 for financial enthusiasts?
Well, it's been an incredible year. NASDAQ up 45%. The S&P 500 up 15%. Those are incredible returns. And it'll be a long time before we're going to see similar returns in the market. So it's been an incredible year for investors. It really has.
Awesome. And the next question we've just had come through is, does location matter to progress your career?
I think so, and it really goes back to networking. that you want to be in a place where there's a lot of other smart people who are interested in the same things that you are. So being in some of the financial hubs where it's Wall Street, New York, London, or Silicon Valley, San Francisco, and those are important places to be. You pick up so much from just your friends, coworkers, people in general, and that's where you want to be to learn and progress.
Amazing. Thank you, Erlend. I think that is probably the last question we're going to get. So I think we can call it a day for today. Erlend, thank you ever so much for giving your time to speak at this event. I really appreciate it, and I'm sure everybody that's been watching the event has really been appreciating it as well. In fact, one last question has just come through. On what basis are crude oil prices determined?
Well, like all commodity prices, they are traded on the exchange, and they're buyers and sellers, and they set the price.
Awesome, thank you. I'm just gonna wait just to see if any final questions come up, but I think we're probably all good. Okay, great. So, like I said, once again, thanks again for giving your time for this event. Like I said, I really appreciate it. I know the rest of the Business Society really appreciates it. I know anybody that's tuned in to watch this event appreciates it as well. So thank you. Have a great Christmas. Everybody who's watched, thank you for tuning in, and also have a lovely Christmas. Thank you.